Welcome back to US Stock Express. It's December 9th, 2025, and we've got a packed show covering all the market-moving headlines you need to know. So what's on the docket today? Can ExxonMobil's explosive new 2030 vision really power its stock higher for the long haul? Why did a massive spending surprise from JP trigger such a dramatic sell-off? Is the labor market truly stuck in neutral, and what does that mean for the Fed's next move? And can AutoZone recover after steering straight into an earnings pothole? Let's dive in and break it all down. First, let's set the stage with the broader market. It was a mixed and fairly quiet session overall. The S&P 500 took a slight step back, dipping 0.17%. The Nasdaq 100 was nearly flat, but still in the red by a hair at 0.07%. On the brighter side, the Russell 2000 managed a small gain of 0.11%. But not everyone was invited to that party. The Dow Jones brought up the rear, falling 0.41%. Now to the big macro story, all eyes are on the Federal Reserve, which is expected to deliver what analysts are calling a controversial hawkish cut in December. That's a rate cut paired with language suggesting more vigilance on inflation. But here's the twist. A new CNBC survey reveals a stark divide. It shows a clear gap between who the market thinks will be the next Fed chair and who they think should be. That uncertainty is adding another layer of complexity to the policy outlook. Speaking of complexity, the latest economic data is painting a puzzling picture. Just as the Fed talks tough on inflation, the new JOLTS report shows a labor market that seems stuck in neutral. Job openings have essentially gone flat. But dig a little deeper, and you'll see some underlying cracks starting to show, suggesting this cooling trend might have more to it than meets the eye. Shifting from the macro to a specific stock story, JP Chase gave investors a serious case of sticker shock today. Shares tumbled after an executive revealed the bank expects to spend a whopping $105 billion next year, blowing past analyst forecasts. Wall Street is worried this spending spree, driven by growth initiatives and lingering inflation, will crush profit margins. The sell-off was sharp, reminding many of a similar cost scare the bank faced back in 2022. On a much more positive note, let's talk about ExxonMobil. While JP spending plans spook the market, XOM is making headlines for boosting its long-term financial targets, and investors are loving it. The energy giant raised its 2030 guidance, projecting an extra $25 billion in earnings and $35 billion in cash flow growth. They're promising more efficient production from key assets, and this confident outlook pushed the stock up over 3%. Not every company is raising guidance, however. AutoZone's stock skidded today, dropping over 7%. This sharp decline came after the auto parts giant reported quarterly earnings and sales that fell short of Wall Street's expectations. The miss happened despite the company continuing its aggressive store expansion strategy, which has investors questioning the underlying momentum. From an earnings miss to a clear winner, let's look at GE Vernova. GEV's stock surged 6.6%. As the market cheers its prime positioning in the AI boom, the company supplies the critical power and grid solutions needed for energy-hungry data centers. With a strong multi-year outlook and significant institutional buying, the rally has some serious fuel behind it. Staying on the theme of positive moves, MarketAxess is also soaring. MKTX jumped 6% after a strong presentation at a major financial conference. CEO Chris Concannon outlined new financial targets and announced an increased share repurchase program. That's a clear signal of management's strong confidence in the company's automated trading future. And the bullish news keeps coming. Apollo Global Management surged nearly 5% today. Fresh data shows major institutional investors are piling in, with one fund increasing its stake by a massive 236%. While a CFO share sale provides a minor counternote, the overwhelming sentiment on Wall Street remains positive, with a chorus of analysts reaffirming buy ratings and raising their price targets. Now let's switch gears to a stock moving in the opposite direction. Campbell Soup is making headlines, but for the wrong reasons. The iconic soup maker reported a mixed fiscal first quarter, beating earnings estimates but seeing both sales and profits decline year over year. Despite the earnings beat, the stock fell sharply as investors focused on those weak sales, shrinking margins, and a gloomy overall outlook. Finally, let's end on a lighter but still business-relevant note. Rollins, through its subsidiary Orkin Canada, has released its annual Rattiest Cities list. This public relations move highlights a persistent rodent problem that frankly directly fuels demand for its core pest control services. It's a clever reminder of the steady, if not glamorous, business of keeping Canada critter-free. That wraps up today's market update on US Stock Express. Thank you for watching. Stay informed, and we'll see you next time for more insights to help you make smart investment decisions.